This is the launch of the bank's latest economic forecast and quarterly bulletin for the third quarter of the year. So I'm accompanied today by Gillian Phelan from Monetary Policy Division and Martin O'Brien from Irish Economic Analysis. So we'll run through the presentation in the usual way, starting with developments on the international side, and then we'll move on to look at the latest forecasts and to talk about the policy messages in the bulletin. So Gillian, I'd ask you to start.
Okay. Thanks, John. So as John said, I'm going to start with a quick overview of the international economic environment. So the global economy continues to grow, and it's supported largely by the development in the advanced economy, where fiscal tightening has been reduced and accommodative monetary policy remains. In emerging economies, growth has continued, but at a slower pace, but it is pretty much in line with expectations. Growth in the euro area, well, it is positive, but it's failed to gain any real momentum, and it still lags behind the conditions in other advanced economies. And finally, inflationary pressures are subdued, and they've been subdued for some time, particularly in the euro area, and it's recorded annual inflation of just 0.5% up to so far this year. So starting at the global level, activity has softened somewhat in the first few months of the year as a result of temporary factors, mainly in the US and China. In line with the slowdown in activity, global trade rates have also cooled over that period. So this chart shows industrial production momentum, which is represented by the blue bars, and the Manufacturing Purchasing Managers Output Index, which is the red line. So if we look to the far right-hand side of the chart, we can see that industrial production has lost some of its pace in the first half of 2014. But there is a slight improvement in global PMI output data in quarter two, and that's indicating a slight improvement in global activity as the quarter has progressed. So focusing in a little more detail on Ireland's three largest trading partners, the US, the UK and the euro area. It's clear from the charts really that quarter-on-quarter GDP growth is very strong in the UK. Conditions in the US were disappointing in Q1, where unusually cold winter adversely affected the normal consumption patterns. However, indications for Q2 are pointing towards improved conditions, as evidenced by the consumer sentiment and a general recovery in the jobs market. Growth in the euro area, however, remains weak by comparison. Q1 growth was below expectations at just 0.2%, and this was notwithstanding strong growth in Germany, and while activity in France remained relatively flat. So looking a little further ahead at the latest OECD growth projections for this year and next year for the major economic regions. Overall global growth is expected to pick up in 2014, but will remain moderate, just below 4% in 2015. Growth will be stronger in the US and the UK compared to the euro area. Overall growth in emerging markets is expected to be lower than in recent years, thus reducing their overall contribution to global growth in relative speaking. Euro area growth is projected to be just 1.2% this year, with a slight pickup in pace to 1.7% in 2015. So this is linked to a gradual recovery in domestic demand, which is expected to support growth as the year progresses. So finally, on the inflationary front, inflationary pressures remain generally subdued in advanced economies. Throughout the course of 2014 to date, euro area inflation rates have remained very low at just 0.6%. And currently stand at just 0.5% in the year to the end of May. If we exclude the impact of energy prices, core inflation is also low at just 0.7%, and this is reflecting weak economic activity and a persistent negative output gap. Inflation is projected to approach 2% in 2015 in the US and 2% in 2014 in the UK. Inflation projections for the euro area show that it's expected to remain low for some time, so just 0.7% in 2014 and 1.1% in 2015. So now I'll pass you over to John for an overview of developments in the domestic economy.
Thanks, Gillian. To turn to the domestic economy, so the main message from the bank's new forecasts is positive. We now expect that the economy will grow more strongly in 2014 than we thought previously. So we now forecast that the economy will grow by 2.5% this year as compared to 2% at the time of our last forecast, which is 0.5% higher. We've revised up our forecasts for a couple of reasons. So the latest data that we have is telling us that the economy is growing stronger than was estimated previously. GDP in 2013 is now estimated to have increased by 0.2%, as compared to a previous estimate which suggested that it had contracted by 0.3%. Importantly, the revisions for 2013 also include significant changes to the profile of quarterly GDP growth. And in particular, we've seen the initially reported sharp contraction in Q4 largely revised away. On top of this, then, the data that we have for Q1, the national accounts data for Q1, now signal that the economy has a stronger growth momentum than previously estimated. So it looks like the economy has started the year in a better position than we thought. The main reason has been the improved performance in exports, and this would appear to reflect both some recovery both an improved international environment and also some recovery in the output and exports of the pharmaceutical sector, which suggests that the impact of the patent expirations on pharmaceutical exports may now be easing. So we have this combined with the positive effect of an improving international environment, and this is kind of one factor at work behind our forecasts. On the domestic side, kind of while consumer spending has remained subdued, we're seeing signs of improvement in things like employment. We're seeing growing investment spending, and we're seeing business and consumer confidence picking up. And we think that these things will help to generate some disposable income growth, and this will in turn will generate some improvement in consumption, some increase in consumption this year. So if we turn to the next slide, which show our forecast numbers, and if we look at 2014, as I say, our forecast is for the economy to grow by 2.5% this year, which is a percentage point higher than in our previous forecasts. On the external side, as I said, we've made an upward revision to our export forecasts, and we've pushed them up to now we see export growth being at 4% this year. And that's on the basis, as I said, of the improving external demand outlook, together with a moderating impact from patent expirations. Now, we also see domestic demand making some positive contribution to growth this year, and we see a strong rebound in investment, together with some modest growth in consumer spending, as the improving labour market kind of gradually feeds through to disposable incomes and feeds through to consumer spending. Overall, while exports kind of have an important effect on the revisions to growth, we see growth this year as being more balanced. So we see both an external contribution and a domestic contribution. However, I would add that while we see domestic demand as growing this year and doing better than it has done for some time, the projected recovery in domestic demand is still seen as being relatively mild. If I turn to 2015, then our 2015 forecasts, we start with the consensus forecast from the main international economic institutions in terms of taking our read on the external environment. And so on the basis of the projected recovery in demand in trading partner countries, a further strengthening of growth is expected next year. But growth in 2015 is also seen as being supported by a continuing improvement in the domestic economy. So we see both consumer spending and investment spending improving a little bit next year as well, against the background of continued growth in employment and some easing of headwinds as well in terms of the rest of the economy. So combined with stronger projected growth in exports next year, we see GDP projected to grow by about 3.3% and GNP by 2.7% in 2015. Now, I'd emphasise that a good deal of uncertainty attaches to these forecasts, and the outcome will be particularly sensitive to any developments in the international economy. Given the projections for a gradual recovery in the economy, we expect inflation to remain relatively moderate over the forecast horizon. Finally, in terms of forecasts, I'll say a little bit about the labour market, and to focus on that a little bit. The performance of the labour market over the past year or more has provided the clearest evidence of the improvement in the economy over that period. And after very strong growth in employment over the 4 quarters of 2013, we saw the pace of improvement pause a bit in the first quarter. Now, in some ways, that is not surprising, maybe after a period of very strong growth. But if we take average employment growth for the year from the first quarter to the first quarter in 2013, it's running at a rate of about 2.3%. Encouragingly, in the first quarter, we saw full-time employment continue to grow, and we've also seen growth in the labour force. So the news from the labour market still remains fairly positive. On the basis of the moderation in growth in the first quarter, we've revised our employment forecast slightly, but not by very much. So we still see employment growth this year growing well in excess of 2%. And that should help the unemployment rate fall. So we see the unemployment rate continuing to fall over the forecast horizon, although the overall level of unemployment in the economy remains relatively high. So if we turn to policy issues then, and to comment on the bank's main messages in the bulletin on this occasion. So the Ireland's smooth exit from the EU IMF programme since the start of the year has been helped not only by the improving external environment and favourable financial market conditions at the international level, but also by the fact that Ireland has continued along the required path of consolidation and adjustment. And continuing to build on the achievements of recent years will be crucial in coming years. So our messages are largely focused on that point. If we turn first to the public finances, so in terms of the public finances, with respect to the public finances, there have been a couple of influences at work in terms of the data that we've seen and what we've seen so far. The revisions to the national accounts data result mechanically in lower deficit to GDP and debt to GDP ratios, even though the levels of the deficit and debt in absolute terms remain unchanged. The exchequer data significantly, though, have been relatively positive for the first half of the year. We've seen revenue grow well ahead of target, and expenditure has remained on track. The bank's message then in terms of 2015 is that to continue to signal Ireland's determination to consolidate the public finances and to maintain market confidence, it's important that the budgetary plans meet the agreed commitments. And the priority for 2015 remains to reduce the deficit to GDP ratio safely below 3%. So that would mean ideally maybe with an additional provision for some buffer to guard against adverse shocks. We're still pretty early in 2014 in terms of only having exchequer data for the first half of the year and quarterly national accounts data just for the first quarter. So our focus, as I say, is on the deficit to GDP ratio, and to emphasise that, I suppose, beyond 2015, further consolidation will continue to be needed. In the banking sector, liquidity and funding positions are continuing to improve, and bank profitability is also gradually showing some signs of recovering. However, the key issue remains in relation to in dealing with impaired loans. The bank established mortgage arrears resolution targets, which require the banks to make progress in putting in place sustainable long-term arrangements with customers in long-term arrears. And gradually, from the targets we're seeing and the mortgage arrears statistics, we're seeing that progress is being made. So if we look at the recent mortgage arrears statistics, we see that long-term arrears, not only do overall arrears continue to fall, but long-term arrears have also fallen for the second quarter in succession. And although there has been some migration into very long-term arrears. Now, gradually progress is being made, but there are many cases where there hasn't been adequate cooperation between bank and borrowers, and which have gone down the legal route. And the Governor mentioned this in a newspaper article which he wrote yesterday, published yesterday. And in those cases, I suppose, we're just sounding a note of caution that there is a risk of a worse outcome for bank borrower, for both borrower and lender. The bank is also monitoring the progress of banks in resolving the backlog of distressed commercial portfolios and the position in relation to SMEs. And gradually, again, in this area, we're seeing progress being made, and gradually the balance sheets of banks and their borrowers are being repaired, which is essential to support a return to sustainable and sustained growth in the economy. On this occasion, I'll just say a little bit about there's a couple of articles, signed articles published in the Bulletin, and we have the authors of these articles with us today. We released the articles on Friday, so you may have seen them already, but we have the authors with us today. The first article that I'll just mention looks at the macroeconomic imbalances procedure, which is a change to the EU economic governance framework, and it looks at how what the elements of that framework are, and the Irish position in relation to the procedure. The new procedure focuses on kind of enhancing macroeconomic surveillance at the European level, so it complements the Stability and Growth Pact, and so it's an important addition to the economic governance framework. Overall, what we've seen is that Irish imbalances have reduced since the downturn, and external imbalances are not significantly a cause for concern. If we look on the domestic side, there are still signs of some internal imbalances, and that these will take time to unwind. So if we look at things like, for example, debt, private sector debt, unemployment, public sector debt, these are still in the process of unwinding, but certainly they're moving in the right direction. The second article then is on the reinsurance sector in Ireland, and it looks at developments in the sector, and it kind of reports on the new data that we have. So it looks at the factors which have encouraged reinsurance companies to locate in Ireland, and it uses company level data to look at the role of the sector. The article makes the point that Ireland is a major centre for reinsurance companies, and that this is a sector which has grown significantly in terms of size. Total assets under management are around, I think, 55 billion at the end of 2012. And in terms of then regulatory issues, solvency ratios, which the article looks at in terms of the ratio of available solvency margins relative to required regulatory margins, are shown to have strengthened in recent years. So again, we have the authors of those articles here if you have any questions.